Goji Center.
This is Ben and AJ from Pathway Financial. I met Ben a little over a year ago. He does my taxes and everything for me. So I wanted him to come in. I told these guys that we did a tax guide about a year ago, and all he talked about was S-corps and everything. This won't be that. So he's got a good outline, just to kind of go over what deductions and everything that we can, should, things we probably should avoid, I'm guessing. So I'll turn it over to you guys. Thank you so much.
We're going to pass everybody out a sample Schedule C for 2024, which is a good way to start and just kind of get an idea of what the IRS is actually expecting from you. Dan, everybody here is 1099? Is that how that
Yes.
works? Okay.
Yeah.
So,
Now there's a couple that are dual, like Leslie and I are
Sure.
also employed as well.
Yeah.
So.
okay. So most of you are going to get a 1099 then, which is, you can call it what you want, subcontractor, but it's going to be self-employment. So just to get an understanding of how self-employment works, when Dan gets his W-2, he gets half of his self-employment and Medicare paid by his company. Whereas strictly on a 1099, you're going to pay the full 15% plus federal plus state. To use simple numbers, if you're making around 60 grand, you're essentially going to be taxed about 30%. So just have an understanding of how self-employment works. They do tax you more heavy than W-2. So the importance of what we're going to cover here is how you can legally track everything you need to cover and what you can deduct from your income and hopefully make it easier on yourself. So I don't know if you want to start with the...
Well, if you guys have any questions as we're going through it,
please make it interactive.
Please.
Yeah, so I have a question. You said above 60,000, then
Well,
you're getting taxed at
I'm
30%?
just rough numbers. There's a whole bunch of things, single versus married and how that all corresponds, but just using 30% as a rough estimate until you make a certain amount of money, then it's going to go up. But I'm just thinking if you're approximately 12% at federal, plus 15 for Medicare and Social Security, plus then the state of Michigan, which is 4.25%. So if you add that all together, you're around 30%.
Well,
So that's kind of a rough number.
If you think about it with like if you have a W-2 job, or if you've had one before, there's taxes withheld on it, and so your check is smaller than what the gross is. You guys on a 1099, you get the gross and nothing withheld for you. Right. So you are responsible for that part that would normally be taken out on a W-2. And that's why taxes are higher.
Get that and don't say the 30% that you be saving, right?
Almost everybody forgets.
Yeah, almost everybody.
At least for the first year, huh?
Yeah.
Right, and then you're like, oh.
Okay, so I have one more question.
Of course.
My husband and I have a business already, and so he's a 1099 as well. We have no employees or anything. Would we file together or would we file separately?
You would still file jointly, you would just have two Schedule Cs.
Okay.
So you'll have your other one plus now this one.
We do taxes for people that have like sometimes 5 or 6 Schedule Cs just from the random businesses that they do throughout the year. So that doesn't change whether or not you can file jointly on your tax return.
I'll start with the mileage there and we'll...
Okay, perfect, yeah. So if you look at the Schedule C, that's in front of you, and look at line 9, that's the car and truck expenses. For most people, the most advantageous is actually going to be taking a mileage deduction instead of doing the actual expenses. When you drive around, I think it's, what is it, 67 cents to the mile for 2024?
Correct. So to give you how that deduction works, essentially you could either, technically you can depreciate your vehicle and get into some of real expenses. It almost always makes sense just to take mileage. If you are able to do 10,000 miles, that's a $6,700 deduction next year. So mileage is definitely probably the way to go because you can take that year after year after year, whereas if you deduct your vehicle and you sold it, you'd have to recapture some of that. So it almost always mathematically makes sense just to track your mileage, especially as a real estate agent. I have guys that are doing 40,000 miles in a year, right? So you're putting on a lot of mileage, it's a pretty big deduction.
Is there any app you recommend that's best for that?
Mile IQ. It's like 99 cents a month. And that's what we use at Pathway. It's very easy. Just start, stop. You have a full legal log for the IRS at the end of the year. So I would certainly go that route. And to put that in perspective, though, it's 192 miles a week, pretty much, to get 10,000 miles in a year. So it's not that hard to get a pretty big, deduction out of it. So,
Any questions?
If you didn't count the miles, can you count the gas? 'Cause
So that's the difference. You can do one or the other. You can do real expenses or you can do mileage. It almost always makes sense to do mileage, plus it's easier, because the problem with gas is when did you use that gas for personal versus business? Mileage is much easier because you can start when you leave to go to a client's house or, that type of thing. Versus if you fill your tank and then you do something on Sunday with your family versus it's a little harder to track. You can do it, but it almost always makes sense to do mileage in the long run. I mean, they're giving you way more per mile than what it actually costs you to go anyway.
We hope. If that's not the case,
Yeah, you need to buy a new vehicle.
You're leaking
So you
gas.
say like 67 cents?
Per mile,
Yep.
for 2024, and that will change, I'm sure.
That'll change, yearly. Good question.
So is there a certain, like, you should, in order to deduct this, how much should you make?
For the mileage,
Right, like,
Yeah.
any deductions, like.
You can take them all, you can take a loss, and that's not a bad thing for the first year, 2, 3, even up to 4 and 5th year. At some point, you're gonna need to, if you're not making a profit after 5 years,
Right,
it's time to do something else,
It's a
'cause
hobby.
it's a hobby and the IRS will shut you down.
You make I was just talking a little more about it, nowhere.
so your mileage will outweigh your actual expenses most of the time. And so that can generate a loss without you actually spending that much money.
Right,
So that's okay for it to do that, and you should take those expenses right away. Like as soon as you're starting to earn that income as a 1099, you should be taking those mileage expenses. Those are the ones that most self-employed people look forward to right away, because they're more than what you actually spend out of your pocket every year.
Yes. Does that help for the mileage at least?
I have another question on
Yeah.
mileage. Would it be okay if, like, say for example, I haven't tracked my mileage, I have another app, but I haven't actually been doing the,
Yeah, I would try to come up with a reasonable amount.
I know off the top of my head, like,
I would get a
write it
notebook,
down and that
I
would
would
be
get a
okay.
notebook and come up with something that's easy enough to explain. You can always,
Yeah.
show how you came up with that mileage. So we do
Yeah.
that all the time when people don't track it. It's like, well, give me,
Okay,
go through and give me something at least.
okay.
And that's mostly just in case the IRS comes back. Usually what they're asking for is proof.
Yeah.
And if you write it down even in a notebook,
Yeah.
that's proof for them that
Okay.
these were the trips that I took. I will use Google Maps if I forget to do a trip,
Yeah,
and then say what was the mileage from here to here, because they give you the miles to do that trip round trip. And so then I can use that and just, I have a few transactions that are off of the app because I forgot to turn it on or something like
What
Okay.
trips don't count? Like,
that. Good question.
Yeah, if you have a home office essentially, so if this is your home office and you go from home to here, you're technically not supposed to deduct that mileage. It's from your home to a client's house, from here to a client's house, from here to a store to go get something. So as long as you're not going from home to your home base office, everything outside of that can be tracked.
So for most of you guys, you don't have an office here, you're coming here for training and stuff, each of those trips get written off.
So if you meet somebody here too, right?
If you
Sure,
meet someone
yeah,
here,
yeah. Yep, absolutely.
meet somebody at coffee,
It has to be around revenue or deductions directly related to business. So if you just go to the grocery store, that's not deductible, but if you're going there to buy cookies to leave at a house or something like that, or to bring to a showing, that's deductible, that's different. It has to be directly related to the business activities.
I should be deducting every trip I go to Abby to pick up stuff for printing.
You can.
Right.
Yeah.
Sam's Club,
100%.
Costco,
I know.
all of them.
Costco,
Yep.
Sam's,
Sam's
I know.
Club.
Yeah.
I don't do that.
And to what we said earlier, it's not that hard to get a pretty big mileage deduction because there's a lot of that stuff
Sure.
going on. If you look at, under the expenses on your Schedule C here, we just talked about car and truck expenses. You can kind of just go down the line here. There's gonna be a lot of stuff that doesn't really apply to you guys. You'll see 13, you'll see depreciation. That may come into play some point for you, it may not. You think of things like laptops, maybe a camera, depending on what you guys are doing. You can kind of depreciate that stuff, take it over several years. If you're already taking a loss, a lot of times it makes sense to carry some of that expense over 5 years versus all in the same year. That can get real complicated really quick, but just be aware that a lot of items are eligible to be depreciated, which give you an option to either take it all or push that down the road. I'm seeing line 15 for insurance. We'll just touch on that. At some point, it doesn't hurt to get an LLC. It's $50, state of Michigan, not required, doesn't hurt. So it's not a bad idea to at some point have that for yourself. It separates your business from your personal life. If you got sued for whatever reason, they can't take your home and your, whatever. As far as insurance goes, I don't know that we need to talk much more about that. In this reference, it's talking to health insurance. I don't know if you wanna cover that.
Yeah.
Health insurance.
Yeah, so health insurance for self-employed individuals is deductible on your tax return. It won't be a line item necessarily on something like the Schedule C. It's a separate form and all of the stuff. But it is deductible as long as you are not covered by another plan, like a spouse's plan through their work. As long as you're not covered there, then you can deduct that and you're paying the expenses out of pocket. So those are the two kind of caveats that there are to health insurance deduction. But it is available once you become self-employed or 1099 using Schedule C. You can deduct that as long as those two things are true.
So, I have a question in regards to that. So let's say that then, I already claimed the marketplace stuff on our normal, Schedule C. So what would I do, like put my husband on one?
You're probably getting a full deduction already, is my guess.
Okay,
Um,
yeah, so,
I would think you're only gonna take it on the one.
Yeah.
As long as you're maxing that out, which I'm sure you are, maxing out whatever you can get from that on the other one, yeah, you don't even need to put it on. And like AJ had said, it doesn't even specifically go on your Schedule C.
It'll go on your 1040,
Yeah,
the
so
main form of your tax
It's just
return.
offsetting your
It's just
SE or your self-employment tax anyway, so whatever that flows out to be,
okay.
so. Let's see here. So if we go on down the line here, you'll see legal professional services, that can be anything. If you start an LLC, $50 to the state of Michigan, you can deduct that. You can deduct if you pay someone to do your taxes. So I do Dan's taxes, he can deduct the expense of what I cost on line 17. So anything that you kind of do that you can argue you are doing to better your business professionally or something like that, typically you can put that down there. And then if you go down the line, you'll see office expenses. That's kind of pretty broad, but I mean, anything you buy for your home and office, you can, you know, kind of write that off. I don't think there'll be a ton of you for that stuff for you guys, but specifically if you buy anything,
Apparently there's a lot.
well, and there may be, right? I'm trying to think off the top of my head,
That
staplers and,
also includes some software though.
sure,
If you buy some
Yeah.
software that is specifically
Anything from
related to the
Microsoft.
work that you're doing, that can be deductible as well. And most software, you have to renew annually, or you pay monthly for access to it. So those are all deductions as well, and that goes on that same office expense. It's kind of a pretty broad category.
So, okay, so that goes under offices. Cause I heard somebody say one time, like, if you've got a home office, like, be really
we're
careful.
getting to that.
Okay.
Yes,
Yeah.
yes.
You know what I mean, like,
Yeah.
be,
This is even
Yeah.
separate from that. There's a difference between claiming the home and office
Yeah.
deduction versus office expenses.
expenses.
Because office expenses are sticky
all those
notes, pens.
Like, I pay for Canva every month to do marketing here, but I pay it personally, as a doctor, you know what I mean?
Is that a,
That's-
It's a marketing tool.
Cause
Oh,
I,
yeah.
I do marketing.
Yep.
But I pay, the company I pay for, I pay for.
yeah, I mean, you,
deduction,
that
right?
would certainly go on
Yeah.
there.
This is to do my job here.
Yeah.
You could probably put that in multiple places here,
Interesting.
but
Okay.
office
Yeah.
expenses,
Gotcha.
fine, yeah.
Okay.
You wanna touch on the home and office deduction,
Sorry.
since we're
Yes.
talking about that now, how that
So,
works?
yes, the home, the office and home.
Office and,
Office and home deduction can be really complicated because there's two ways to do it. One of them is that you divide out essentially all the expenses of the house by the square footage of the specific office space, and you depreciate it. If you're renting, you don't have to do the depreciation, so that's kind of helpful. But the easier way is that you just do the square footage, and it's times
simplified method, yeah,
$5, right?
I believe so.
Yeah, up to a certain dollar amount.
It's the IRS standard of essentially saying this is what it would cost for heating, electric, whatever,
All that,
for
yeah.
that little square footage out of your overall home. So they just give you a set amount. You don't have to depreciate your room if you do that essentially. So if you ever go to sell the house, there's nothing to recapture. So we typically tell people to do that unless if there's a huge deduction going the other way. But then you have to be aware if you go to sell your house, there's technically things you need to pay back because you deducted something out of an item that you're now selling.
Yeah.
So typically I would say we go simplified method on that,
Yeah.
but it just depends on,
Unless you're renting, that's one
Unless
where
you're
I found that it's a much bigger expense, but it's really complicated to
yes.
get the expense, and to make sure that you have accurate
And
numbers for
that,
everything. So,
the office and home deduction will not even flow against your income unless if you have income to offset. So it's the very last item actually, pretty much. If you look down at line, let's see here, 30, I believe. So if no profit flows after all your expenses, you're not getting a home and office deduction. So that doesn't let you, like the mileage, you're not gonna take a loss off of that. So if you have $2,000 of profit, and you have an expense of $2,000 from the home and office, then it would offset to zero. But if you are already flowing zero down there, you're not gonna get a deduction from it. So just be aware of that too. It doesn't help you if you're not showing profit for the home and office deduction. What else you got there, AJ?
Just moving on the list.
Your repairs and maintenance, is that for vehicles?
It can be anything, kind of, and it's really, I guess, specific to what you're doing. But once again, that's actually not technically vehicles, and that, because that would go over on the car and truck expenses.
So there
But-
is a separate sheet for the car and truck expenses, where you
It's
put
just,
your
it's not
mileage
seen
in,
here.
Okay,
and then you also put in your actual expenses.
Yeah.
To see which one is greater, even if the actual expenses are greater for 1 year, we usually recommend that you do mileage anyways, cause you can do that forever, no matter how many times you buy and sell a car. Whatever car you're driving, you can take the mileage
And
for.
the IRS doesn't want you flip-flopping back and forth between the two.
yeah.
So the one that you choose is the one that you need to stay with. But that's where the repairs and maintenance for vehicles go. It's on that.
On that spot.
The repairs and maintenance is more directly related to the business. If you had to do a repair in a home office, for example, that could go in a line like that.
I see, okay, thank you.
Don't touch taxes and licenses.
Sure.
It's not, actually.
I don't even know much of what would come off of there other than,
So I have an LLC for my business, and
Mhm.
so I would include that in that section, you know,
you currently
For
have
the
an LLC for like,
not for myself, not for this business, not for real estate, but for our main business.
yeah, I mean,
Yeah.
you're asking if you could deduct the expense of that?
Yes,
Yeah, and do you have an EIN number for it?
I do,
So it's probably already specific to your other Schedule C that you guys have for the painting,
yes,
But
so-
renewing the LLC, yes.
which is $25.
yes,
Yeah,
yes, $25 a year.
Yep.
So for us, we have to renew renew our dues every year,
Mhm.
so that would be under there.
100%.
If we
Yeah.
do CE where we're getting certified for something,
Yep.
or would that be more education?
But
I
you,
mean,
you could put it under
Either
there,
one.
it doesn't really matter, between those two, I would say to some degree, but,
Okay.
yeah, it's all gonna flow out the same. But yeah, any, CE, any renewals, if you have to renew your license, I'm not even 100% sure what you have to do as a realtor. Is
Yeah,
it just
every
a
year
fee?
it's $810.
$800, yeah,
Yeah.
and that goes where?
Yeah.
That could
But
go-
don't forget your office bill, every
Oh,
month
yeah,
gets
that
written on
149
there,
office,
Yep,
so.
Where does it go?
it goes where?
Under taxes and licenses.
Yes.
Oh,
Taxes and
that line,
licenses.
okay. For our licenses, gotcha.
If you look right under there, you'll start seeing some things for travel and meals. So what's meals right now? Is it 50% typically?
Yeah,
So
that's, I say that forever.
yeah, okay. Well, you're the accountant. You would know, right? So 50% of your meals. So if you know are buying lunch, even that for yourself while you're out and about seeing clients, whatever, track that because you get $2,000 at the end of the year. They let you take $1,000 from that as a deduction. So it's certainly worth.
Even if it's
Track
for
that.
us?
Yeah.
Okay.
So if you guys went to MAR convention,
Like,
your
Yeah,
meals for that are all considered?
but now do we have to have the receipts?
Yep.
I would keep it for yourself.
Yes.
If I'm doing your taxes, I don't wanna see receipts, cause I wouldn't have time to go through, thousands of receipts, but keep it for
You
yourself.
get audited.
And we'll kinda touch on
Yeah, we'll get into tracking after.
how
we go
to,
through this.
yeah, how to kind of track things, but yeah, I would certainly keep them for yourself for a couple of years.
50% up to 1,000?
No,
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 she's
no.
saying, he was just saying.
Yeah, I was just
Oh,
using an example.
okay, I was like,
Yeah.
what's it,
Yeah.
at the end of the
If
year,
you spend
get
10
$50,000.
grand, I wouldn't suggest you do that, you certainly could, yes.
And then along with travel, like if you go to any conventions or anything like that, and that goes in there as well. The cost of getting there, you can take the
Hotel
mileage if
stay.
you drive there
Yeah.
and all of that, so
That covers a pretty broad,
it does.
Uber or
Wow.
whatever else you're doing, you could put on there for sure. And then you'll see things that don't really apply to you, like wages, as if you were currently paying yourself or paying someone else, as well as contract labor up on line 11. That's if you were 1099ing someone for yourself, which probably won't be relevant for a while. And then at the bottom there, you have other expenses, and that's pretty broad. That's anything that doesn't really have a place up here that you can deduct is gonna end up going under there. I'm trying to even think of an example off the top of my head, but.
But if you put anything in there, it's not the end of the world, everybody always has them, it just has to be itemized. Flip over your Schedule C, right on the back at the bottom, part 5. And that's where it has to be, what is it, what was the
You
amount?
specifically list each one in the amounts.
Yes.
Okay.
And yes, everybody does have them, sometimes 30 of them.
And then advertising, we skipped number 8 there, but that could be postcards, marketing on our shirt for our business name.
If you paid for a Facebook ad, you name it.
Okay.
Yep. Do you guys have any specific questions on the, I mean, we skipped part 1, but that's just your income. And I'm assuming everyone's gonna get a 1099, that's gonna go on your, you know, your tax return, which flows to the Schedule C, which would be on line 1. I don't think there's a whole lot to cover there. It's just your income's gonna flow to line 1, and then you have all your expenses down here, which offsets it. Hopefully. Any specific questions on the Schedule C and kind of what we covered, or anything that you want covered from what you're looking at?
Say you like had to repair the computer, would that be in the repairs and maintenance, or like in the battery or something of that sort? Is that what that
Yeah.
would be under?
Yeah,
Okay.
and it probably depends on how you're deducting the computer too.
Okay.
But yeah, typically I would say it just goes to repairs and maintenance. You can kind of put anything there.
But if you put it in office expenses instead of repairs and maintenance, ultimately that's not gonna change the bottom line.
Okay.
So if the IRS comes after you for something like that, we just go, oh, we'll just flip it and the number stays the same.
Okay.
So it's just,
So
I mean,
office expenses.
right church, wrong pew kind of thing. You know,
Okay.
more than anything.
Yep, those games are.
Could you
Because some
explain,
expenses can go in, I mean,
Yeah.
you could justify putting it in 10 different categories.
Yeah.
You know, like technically
we
I use
certainly-
my laptop for advertising
Yeah.
and so
Okay.
you just do your best.
I don't do every tax return exactly the same, you know, like you kind of tend to move things to certain areas, and especially on a Schedule C, because there's some that are pretty set, like advertising, right? It's like, okay, well, is it advertising or is it not, right? So you can kind of do some of that, but there is a lot of fluidness on where different things go. And that's probably without even touching the cost of goods sold, but I don't
I
think,
don't even wanna go.
okay, let's not even touch that. Do you have a question?
could you explain a little more about the LLC, how would that help us?
Well, it's just a liability shield.
Mhm.
So it's through the state of Michigan, it's $50 and then it's 25 every year after. It's not required, it's not a bad thing. Most people I suggest at some point, if you're gonna continue doing this, you certainly should. Just to protect yourself. It kind of separates your business from your personal livelihood.
This is a question for Dan, but we wouldn't have to market ourselves as our LLC, right? That's just okay. I was just like that. That was a. I was
In
like,
fact, you can name your LLC the most wild thing. It really has nothing to do with, you know,
that's yeah.
It just gives you a separate EIN that you're
Correct.
filing your taxes under, so it's that shelter. If you get, let's say you really screwed up on a listing and they go to sue you, technically you are tied to your personal assets. The LLC gives you that separation. They can
Yeah.
only go after the assets that the LLC holds.
Exactly.
That's it.
Yeah,
That
'cause
about right?
if you're just a DBA, which is doing business as yourself, you have an infinite liability. They can come after you personally, I mean, take your phone, do kind of everything that they want if they sued you.
it's almost never a bad idea with an LLC.
We don't like an umbrella policy.
It's so cheap. It's so cheap. It's kind of like at some point, why wouldn't you? And it's just on the
And it's
Hero
tax
website.
deductible.
State of Michigan is pretty
And
cheap.
some states are much worse, cost wise,
Oh,
like
yeah.
Florida, I think is like $350 a year for your LLC.
Oh my goodness. A year?
Yeah.
How would that change
Well,
for
yeah,
us
I-
here? So we would still use our Schedule C in that. We would still
Correct.
use
Yeah.
it in our
So
1099,
right up at the top
right?
there, you'll see business name.
Yep.
And then you'll see there is a line item for social security number or an EIN number. So if you get an EIN number, it's just gonna be your LLC name, EIN number, which the EIN number allows you to get a business, bank account, you know, where you can't do that with a social security number. So it allows you some flexibility on what you can accomplish as well. So,
So that kind of goes into the next part of tracking expenses. No, of course.
Sorry, I'm still here. So like me, I have less than a year. Can I do the LLC before December and claim it with the LLC for next year? I mean, for the 24 or no? Or start
Can
it
you
with,
start the question over again?
like, if I start, I've been in real estate for 1 year.
Yep.
I haven't claimed taxes yet.
Okay.
So I'm gonna claim that 2024, can I do the LLC like now, December?
Yeah.
And claim it with an LLC?
Yep,
Okay.
and
If
claim it,
you have an LLC starting December 31st, it's considered an LLC for the whole year.
Okay, yeah, then.
So
That's cool.
you just only have the liability.
Everybody's gonna go get an LLC tonight.
You just only have the liability protection, I mean, starting December.
and if you want a better tax rate, get married on December 31st too.
Yes.
Yeah.
It's
Real?
considered
Or
married
have
for
a
the whole
baby.
year.
Have the
Or
baby.
have
Yeah,
a
it's
baby.
like, say less.
I'm just like, oh, no.
Yeah, I'll get the tax rate up. I know.
The world
I
I
have
live in.
another, comment, in regards to like, except for, well, Kenny, I mean, there's a lot of, things in business that you can get, I put my name down as the, main owner of our business because being female and being Latino. There's a lot of people in this room that would also benefit from that same thing, right?
Yeah, I mean, you could, there are certain loan applications or stuff like that.
Is that what you're getting at?
Yes, yes.
Yeah, there are certain things like that for sure, but most of you guys, it's just gonna be you on the LLC.
Yep.
So, I mean, just make sure that it is just you, and if you work with somebody else, have them set up their own LLC, don't write their name on it, cause then you have a partnership and that gets really complicated.
Yeah, then you got a separate return in 1065, and that's a whole other can of worms, so.
Yeah, I know we're throwing things out that you don't.
You guys have so much fun, don't you?
You never get bored.
No.
And then COVID hits and they change all the rules
Oh, okay.
mid-tax season, so it's a good time. You wanna touch on tracking, kind of, we can go over
Yeah,
best practices for that?
you just mentioned the business bank account. It doesn't always make sense for people to set up a business bank account right away, cause, I mean, if you don't have a steady stream of income coming in, it kinda just sits there and doesn't really do anything. But I would recommend getting a separate account, whether that's opening another checking account at the place that you do your personal banking, and just having all of your income and expenses, try to flow them through that one bank account. That will help you track business expenses for the year. We use QuickBooks with a lot of our clients, but again, it's usually,
More of an established.
yes,
Business typically.
yeah, cause it can cost upwards of $55-60 a month to have that, and so it's a good expense to have, but only if you have the income coming in for it. But once you do, definitely get something like that set up to easily track things in and out, and you can link your business bank account specifically to that.
I will mention real quick too, we do have a Excel sheet that one of our business partners created for
Yes.
small businesses, and I'd be happy to email that to anyone.
Please,
Just to
thank
look
you.
at, cause it is a pretty easy way to,
Or maybe
breaks it
did
down by
Dan
month and then gives you
forward
a
it to
log at the end of the
everybody?
year. Which I don't know if I sent that to you or not.
I don't think so, but I keep all mine on a
Yeah.
Google Sheet
Yeah.
and I
Yeah.
follow the Schedule C, line
Template,
items,
Essentially,
so I just match it right up there, so yeah, I'll email you about that.
yeah. And at the end of the year, like, it has all 12 months, and then it has a 13 column, which is just your itemized list of your expenses. So it's pretty handy, especially until you get to the point that maybe you wanna pay for QuickBooks or something like that. So, sorry.
No, that's pretty much it.
Okay. You guys have any questions on anything that we've covered so far as tracking mileage and
How
all that
does
stuff?
it flow when you have had a past W-2, cause you worked previously for another employer, and then now you're a 1099, so like, are you filing two separately, or is it just all one and it all just
So
mushes together?
this will all flow through onto your 1040, so you have like the first line of your 1040 is W-2 income.
Right,
And then further down, you have Schedule 1, I think it's line 10, and it has this income, comes right over right
Right.
on.
Either this income or loss, so if you make
Yes.
20 grand on a W-2 and you have a 5 grand loss, then you're gonna flow 15 down as taxable income. So it does offset your W-2 income if you take a loss,
right.
And this is,
on your business.
yes, yeah, so it does kind of mesh together, I guess, more than anything. It isn't a separate tax return.
Right.
This is just a part of your personal tax return.
I get it.
So I have a quick question. I was asking Liz when she was telling me. My husband also is self-employed in 1099, but he also has another job that is W-2, and we file jointly. I have not made a sale since I've started this, whatever, in a year and a half I haven't made a sale yet. So, but I've spent the money that you're
Yeah.
talking about. Do I still put that into?
Yeah, so,
Yes.
did you didn't do anything on your return last year for you, as in 2023?
I don't think so. So I know I can't count my class, but I took that in 2023, and I didn't put that on our tax. I probably failed myself a lot in last year's taxes, but,
You just had a baby.
yeah, there was a lot going on.
That's a better deduction anyway.
Yeah, there was a lot going on,
Right.
so.
But what she was saying was like, you could take her, I mean, because they're filing jointly, her loss would still go on their tax return.
Yeah,
right?
Yeah.
you should start 2024 as the beginning of your business,
Okay.
and everything you've spent to get yourself to a certain point, track it, take a loss, that's great, and there's no reason not to do that for, even 2 years from now, and you're like, I just wanna be done with this, well, you got to deduct things for 3 years, and now you're
Okay.
just out of the business, right?
Okay.
So, not that that's what you're gonna do,
Right,
but,
right, no, I
it is-
understand what you're saying though.
yeah.
If you had a loss every year,
Got
it's
it.
gonna take, yeah.
But you
So
definitely
the
should
first
every
year
year
is
be
deductible too.
kind of a loss.
The
right?
class is taxable.
Definitely the
Okay,
first
you
year you
take
should
the
get a
exam.
loss, though, right?
Yep, keep your receipt.
It depends on the business that
Unless
you're
you're
in, but
Levis.
most people.
Unless you're Levis.
I mean, we've
Let's
seen
do
the
Levis,
whole,
yeah.
I mean, we've seen a whole range of things. People start businesses and it takes them a couple years to make a profit, and then people start a business and we're like, why didn't you tell us that you made this much money this year?
You
Because
have
they
a
didn't
builder,
realize it. It's
you
just-
have a builder start their own business and make $1 million in the first year, it's just like, right, so it's just like craziness of what you can get into.
But it just depends on the person, but the IRS has leeway to say, if you don't have income in the first year or two, that's pretty normal for businesses, because you're trying to get things up and running, build momentum, and get things going.
Yeah, our agent of the year has been here 18 months, and this year is doing over 6 million.
Almost 7 million.
In sales,
In
in
sales,
sales.
not, yeah,
Yeah.
sales, not income, yeah.
That's
But that's a
commission.
decent income.
It is, it is.
I wouldn't complain.
Right, right.
Unless I didn't save anything.
Yeah, and I have to tell you, you owe 40 grand or
But
something,
that's still,
right?
that's still working part-time too, he has a full-time job, doesn't he?
Yeah, but that's pretty impressive.
I'm scared
Yeah,
of
that's
him,
great.
I didn't know that.
I didn't know that either, that is impressive.
That's what he has to do.
I wanted to touch on, also on the Schedule C piece, there's, I don't know where we get this stat, but if you Google it, I see it all the time, the audit risks of a Schedule C. So, what had you said? You had said something to the TurboTax.
So TurboTax, the two most audited things on a TurboTax tax return is a Schedule C and a Schedule A. Schedule A is itemized deductions, most people don't take that, most people don't even know what that is. This is one of the other ones that is the most audited thing. It's a very high percentage, an uncomfortably high percentage, I'll say, somewhere in the 70s, I would think that of people that do a Schedule C through TurboTax get audited.
They get, well, maybe not even an audit, but
But
some
get a
form
letter.
of letter, a love letter from the IRS saying this, or you owe more, or whatever.
Saying this is wrong, prove it,
Yeah.
or saying like this doesn't make sense,
I didn't get audited, but I did get a letter in the mail,
Yes.
right, cause I used TurboTax and decided to not use my tax guy, and I won't do that again.
Yeah. We do see that all the
So
time.
that is one that we get a lot,
And it's because of the kind of the freedom and flexibility,
Yeah.
because you can just enter anything you want on there. So why wouldn't they look closer at those, right?
Sure.
Versus
Yeah,
a
that's
W-2 that they get reported.
Sure.
and if you spend too much time on the internet, you can find a person to justify every single expense that they want to take. People are like, oh yeah, you can deduct that boat, it's like, no, you can't deduct the
It's
boat.
good that you guys are here explaining it because I had I hadn't personally done it yet, but people tell you, oh yeah, that's gonna be that you can do that, you can do that, and then now I'm like, oh no, now there's a line in between things.
Yeah.
So what were they doing taxes with? Don't go to them.
Well,
Clearly they're not doing
one of
it
the worst opening lines we get is, I saw this on TikTok.
right.
Please.
I haven't on TikTok, but I know not everything is TikTok
And
now.
deducted, that you can get a car in, like a really nice truck, as long as it's like heavy, dirty motor or
Yeah.
something, and you can deduct it as much as, I don't remember.
Well, it's
Well,
a
you
business
can-
You
expense.
can, they just don't tell you the downside,
Well,
which is,
right.
if you sell it in the next, it doesn't even matter if it's
You
the next
own the
5 years,
government
if you
money.
sell,
If you sell it, at some point you're gonna sell it unless if it,
you pay taxes on the income from selling it.
You
Yeah,
guys
yeah.
just need to make a TikTok channel correcting all the videos.
Yeah.
You
probably wouldn't have to
Just
say it here,
snitch
right?
We would have
Yeah,
about
exactly.
6, 7 followers.
We would all be here.
Do you know how many CPA TikTokers there are?
Like,
But it's
that's
different when you have
Some
some, you know, like the
businesses
face to
to
face.
deduct a vehicle if they know obviously they're not gonna sell it and
Yes,
Right, yes, if
100%.
they're gonna run it into the ground, but even then, you can only take the depreciation deduction for the
Right.
first 5 years, 7 years at most. And if you're planning on driving it for 15 years, you could take a mileage deduction for all 15
For all
years.
that, so-
Sell it and not claim any income.
Well, there are a lot of people that like, if they have a business, they lease cars, if they leasing.
There are people that do that.
business, and,
I always struggle with math wins concept, and if you really do the math on it, it doesn't make sense to me. Just as far as a pure profit margin or whatever you
Sure.
wanna
No, I
say,
get
it
it.
just doesn't line up.
I was gonna say, we have like a lot of new people in here, I mean, is there like, can you guys go over like list of things that aren't deductible for real estate? I mean, I don't know, like, if, you know what I mean?
Yeah, that's hard because it's gonna change for every,
Well,
you know,
yeah.
Well, I mean, one would be, it's like the clothes that you buy that don't have a logo or anything on them, that you're just buying to
My whole
look.
wardrobe I just recreated, I can't deduct that.
It's
hard
work.
Because you, I mean, you're probably going to use them personally.
Okay,
You're
so
not just
those that
buying
you think you're
So it
buying
has
for
to be
business.
advertisement, like our
That
logo.
that is the
Dan, you should
safest
start
way to do
recording.
it.
Yeah.
That's the safest way.
I get
Some
real,
people-
I get really
Branded.
comfortable putting a line item of clothes on a Schedule C.
Yes,
Gotcha.
it really
That's just
just,
an easy way for the IRS to say, hey, we wanna see that you've never used that shirt.
and if it was a small thing, like I bought this suit just for showings and that's all I wear it for, it's like, that can be justified, but if you have $10,000 in clothing expense every year, the IRS is gonna be like, nice try, give us our money back.
Yeah.
We want a refund on that,
Okay.
so
Well,
that's.
I'm just curious, you know, I mean, 'cause you go through like,
Yeah.
because everybody thinks, what can I deduct, what can I, if there was some, you know, obvious things, that, like, that's a good one, I mean.
If it's needed for business, it's tax deductible.
Yeah,
Right,
I
Typically.
might need a,
I mean,
I'm kidding.
yeah, well, with my husband, his painting clothes and boots and all that stuff,
Well, that's
that's all
nice.
right off,
Right.
right?
Right, but he's not,
That's
he's
equipment.
not buying thousands of dollars worth of clothes
Yeah.
over the course of the year.
Yeah.
He's maybe replacing it once or twice a year, let's say,
Plan.
at most,
Right,
and then you.
Or it's equipment.
$300.
Yeah,
Oh, it is, that's
Yeah.
important.
You know,
He's
that-
probably not going to an event covered
With
in
the
paint
paint,
then
right,
afterwards.
right,
So
he's not wearing
it's
that
a little more
elsewhere.
Yes, so
That
that's a
makes
little bit
sense.
more
Yeah.
where it's like, so that's why the example, the suit, like it's only for this.
Sure.
You have to prove that it's only for this, and that you do not wear it any other time.
How do you
And
prove
that's-
that, like, are they
That's
gonna
the
work
point, is
for
that's
us?
why we wouldn't put
Maybe
something like that on the
Right,
tax sheet.
like,
Yeah.
unless you, yeah, either way you could lie about it.
okay, well, if you have this on it, right, then it's automatic.
I know, like, wait, do you have a sweater that?
Hey,
I would
if
probably
Trump's
steer
coming
clear.
in office, I'm writing shit off, that's all I have to say.
Everybody's.
Us too.
Everybody's-
There's a couple things that we could touch on that I don't think are gonna be relevant for a long time. In the case of like a SEP IRA, there are investment options you can do with your business once you hit a certain level of profit. I don't even know how much you guys wanna touch on that, but that's.
I would like to touch on that.
Okay, so if you get to a certain point, a SEP IRA could be a great way to deduct, so you're putting money away for yourself in retirement and you're deducting it from your taxes. What's the limit on a SEP? It's kind of a weird,
It's 25% of your net income, so bottom line after all expenses.
that
up
you
to-
can deduct,
Yes,
up to like 66 grand or
up
something,
to somewhere between $66,000 and $69,000
which
a year.
is an extreme amount of money, so if you got to that point, kudos to you, because that's incredible, but
But you
it's
could
such
do-
a bigger deduction than a normal person on a W-2 with 401k can even take.
Right. But those deductions are, we've had this conversation multiple times, they're not dollar for dollar tax savings. So if you owe $10,000 and you put $10,000 into a SEP, you don't just not owe $10,000. You maybe just owe $7,000 instead of $10,000.
That's where TikTok gets us.
Yes.
Can't they just write off 10 grand more, and I'm like, yeah,
Yeah.
save yourself 2 grand, so you
You'll
spent
only
10 grand
save,
more.
you'll save yourself, I think it's like 20 cents to the dollar, or some number
In that
like
ballpark,
that, for dollars that you invest, which is helpful, like it's not gonna hurt you, and you have money invested in the stock
Yeah.
market, which is never gonna hurt you.
Right.
But it's not a dollar for dollar tax savings.
How about like the kids' college or school?
Yeah, that's obviously completely separate from the Schedule C, but that's a pretty big deduction too. That's gonna happen on a completely different part of your
I
tax.
mean, it's not going in here, but still gonna deduct from
Yeah,
your,
yeah,
and it's
up to-
about the same thing, like 20 cents up to the dollar?
No, so I mean, the American Opportunity Credit, $2,500, I wanna say. So if you have a kid in their first 4 years of
Are you talking about a kid, sorry, just real quick, are you talking about a kid in college or saving money for?
Saving for.
Oh,
So
okay.
five,
About
Yeah.
29 or something.
overall.
Go ahead on that.
I don't, that's you.
Okay. You can deduct that, yes, you can deduct that at the state of Michigan,
Okay,
405.29. It's not a huge deduction, I think it maxes out at like $1,000 of a deduction at the state of Michigan. So it's not a big deduction, and that's, to hit that $1,000 deduction, I think you have to put 10 grand into it.
okay.
Yeah, so it's, I guess
10 cents to the
technically it'd be
dollar.
10 cents to the dollar, and I think that's,
But
so
that's
it
just
can
for the
be
state
done.
of Michigan, that's not with the IRS.
Okay,
So if you do that $10,000, it's not deductible to the IRS. It will only go on the 1040 for the state of Michigan, which is separate from this.
Okay, and then one more thing, 25% of your income, that's what you can put into your SEP.
Of your Schedule C profit, essentially, is how, is that a good way to put it?
Yeah.
And then up to, I don't know the exact number, but somewhere in that $68,000 amount.
They change it every year, so that's why we
Yeah.
don't know it, because they update their numbers all the time, and in about a month, we're gonna get new numbers for 2025, and we'll have to relearn it all over again
Right.
for everything, so.
Thank you.
Yeah. I don't know what we haven't touched here now.
Oh, the Grand Rapids.
Oh, yeah, so there is obviously the thought, because I think are we in the taxable zone of Grand Rapids right now? I think we are.
I believe it.
Yeah.
Okay, so there is, and I don't know, some of you might live in Grand Rapids too. So there is the consideration that you do have to pay either resident of Grand Rapids tax or non-resident. Those are two different percentages. And they come for it. So I think resident of Grand Rapids is 1.5%, and then I think a non-resident is 0.75. So there's two different percentages there. But especially on a Schedule C where none of this is getting withheld throughout the year, which we do need to touch on quarterlies at some point. But keep that into consideration. And that's a pretty small number, so typically you don't need to probably pay quarterly to Grand Rapids until you get to a certain level. But you are gonna have to pay it once you start showing a profit, specifically on Schedule C, if you're either living or working within Grand Rapids. I guess we can talk about quarterly taxes then.
Yeah, at what
That's kind of
point
fun.
should you start filing the quarterly taxes?
Yeah,
How many transactions
I don't even know if I call it filing per se, it's just,
Doing.
yeah, you can do it online, or if you have somebody doing your taxes, they can set up your quarterlies and you're just mailing a check or doing it online
Right.
every quarter. There's not a perfect answer for that because people have kids and so they got child credit. So you might be able to turn a profit without owing for several years, right? So it's kind of, the first year typically we'd say you probably don't need to worry about it.
Right.
But with that being said, you have a spouse that has a business that they're doing stuff too, so if you only show $2,000 of profit, that might really cause you to owe quite a bit more. So it's kind of gonna change for each person for sure, but typically the first year, you don't need to do anything, but keep an eye on it, and as you start owing money, I think you had said $1,000. If you owe $1,000, that's when they start charging you
That's
penalties.
what's technically required, so if
Yeah.
2023's tax return, you owed $1,000 or more to the IRS when you filed your taxes, or throughout the year, then you have to pay estimates in 2024 for your 24 tax return.
But when you say you have to, if you don't, they're just gonna charge you a little more.
Yes, that's,
Not like haul you off to jail because you
Ah.
didn't pay your
Yes.
quarterly,
Yeah.
you know, something like
as
that.
we know, because most of our clients will forget.
Yeah, and I never pay nothing every year, so.
So,
When you pay quarterly, are you paying only on what you've made before that payment, if that makes sense? Like, if you pay
technically,
in March,
yes.
are you only paying in March what you made January through March?
Kind of, yeah,
Or
so
how do they
what are
know
the
what
pay,
you'll owe?
pay schedules, April 15th,
Yeah.
July or June 15th, and
September
September
15th,
and January. So most people have a rough idea of what they think they'll do next year once you're established. So if you're like, I
Yeah.
typically gross, $100 grand, I have an idea what I'm gonna owe if I do the same thing next year. So they'll just
Okay.
divide it by 4, pay those, and it gets you close. Maybe
Okay.
you owe a grand or two next year,
So that's,
but you
that's
don't
like,
owe 10 grand or something.
that's a setup for someone who kind of knows exactly what
Kind
they're.
it gets a lot easier.
Okay.
The first couple years of growing a business can make it very difficult, because you can go from, I always take a loss, to I owe 10 grand the next year.
Yeah.
So it's really hard, especially when you're sitting down at tax time and you don't know what the summer's gonna look like, or spring's probably the best time for selling. So you don't really have an idea,
Yeah.
or that great of an idea until but you can change it as you go. Each quarter you can pay a little more, a little less, whatever the case may be.
So is paying estimated, they just help you from paying the big lump sum when,
Correct, and the lump sum, they will charge penalties on it, like,
yeah, if you don't
Yeah.
pay the estimated?
Right.
And I think it's just cause they don't trust us.
Well,
Like, they don't trust us to save the $10,000-$15,000 to pay in
That's-
April, they just say, give it to us
So
throughout
give
the
it to
year,
us
so that would be good
I
money.
mean, it kinda makes,
I just
Yeah.
started talking to my tax guy
Yeah.
to do quarterlies,
Yeah.
so in January, February, where.
Go beyond
Well, I just don't want the big lump sum, I wanna pay a little now, a little.
Yeah.
yeah,
That's how I would feel too, I hate.
yeah. And I don't even know if there's a great number, cause everybody's so different in their,
And every transaction you get a different commission, so it's not really like.
Yeah.
It's,
Yeah.
I just.
is there a set number that you would tell somebody if you were just trying to rough ball it?
Like how much in sales.
Like what
should we
percentage of your income?
I would say you'd rather aim on the high side and get a little money back / push it towards quarter one, cause what you can do is if you're getting a refund,
Right.
you can say, use it as my quarter one estimate.
Oh,
April
that's
15th.
awesome.
So that way you don't get the money back and go, shopping spree.
Right,
You put it towards taxes, pretend it doesn't exist, and then you don't have to pay that quarter estimate, or don't have to pay it. You just don't get the money back that you already paid for taxes.
Right.
But I don't know, I would say 30% would be a healthy number of net.
Right.
So you would have to be tracking your expenses to just make sure that each quarter you know where you're at.
It certainly isn't gonna hurt you to pay more than you're
Well, right.
supposed to, cause you'll just get it back or be able to carry it forward, so,
Right.
which most people don't like to pay more than, you know,
I'd
they
rather
have
pay
to.
more than no, so.
Yeah.
I have a random question that's very off topic, so can I ask it?
Mhm.
Okay. Me and my husband, my brother and my dad have been like going in on this like investing thing, whatever, in like stocks and stuff. When, let's say one were to like go dumb, right, and go crazy, and you pull out, how much taxes are owed on the money that you pull out? And like, if you were to pull out for personal
Yeah.
expense.
Yeah, it is a good question. So, let's just use easy numbers. If you put 10 grand and you buy Apple stock, 10 grand worth of Apple stock, and now it's 15 grand and you sell it, you're gonna owe tax on the 5, right?
Okay.
The gain, and that would be capital gains. And it's different between long-term and short-term. So if you own it for 2 years, you get the more advantageous long-term rate versus the short-term.
So you have to
A year, sorry, yes, a year. So you have to hold it at least a year to get the long-term.
Okay.
And so then you would just owe tax on the 5 grand, which
And the
if
tax
it's,
brackets are different for capital gain, long-term capital gains. If it's short-term, it's ordinary income tax, like on your regular tax return.
which is typically higher.
So if it
Almost
like,
always higher.
so if it like blew up within the 1 year that you got it, you would owe like normal percent in self-employment tax rate? On what?
Just the normal like tax bracket rates, like 12%, 15%,
Okay. Yeah.
24%, whatever tax bracket you land on.
And so then after a year, it goes down just a little bit because you owned it longer, or what was the?
Just after a year, when you sell it, you start paying long-term capital gains.
Okay.
The tax brackets for that are 0, 15, and 20.
Yep.
Those are the 3 levels.
Okay.
So if you don't
They're
make,
essentially capping you.
yeah, so if you don't make enough money in the year total,
Uh-huh.
then it won't get taxed, it'll be at 0.
Oh.
Which is, for a married couple, is pretty high.
Yes,
It's like
Really
almost
high number.
93 grand you could make and pay 0 capital gains on the sale of a stock.
But that's if the couple has not made any money.
Well, has
Or
it made
has it
90,
made-
more than
Hasn't gone
93?
above
Oh, okay.
And if it's above
Yeah.
93,000, it's 15%.
Oh,
Up
okay.
to like 200 something.
Yeah, and that's
It's
where
a
it would
big
switch.
number,
Yeah,
it's a big
okay.
number the next break before you get to 20%. But
Okay.
at most, I think it gets taxed at the 20, is that the
Correct.
highest?
That's the highest for the long term.
Yeah, but again, that's holding that investment for a year.
Yeah.
And investing in the stock market, the way that you were talking about it, not through a retirement plan, that's how that would be taxed.
Okay. They had just, we put $100 into something that they're like, oh, it's gonna, I'm like,
Bitcoin?
okay, well, no, Pepe.
Oh, yeah.
It's
Oh,
the meme or whatever.
Yep.
He's my brother. I told him, I said, okay, I'll put $100 towards it. I'll open an account and I'll just see what it does.
For that, I wouldn't even be too worried.
Yeah, and that's what I'm saying. If we lose it, it's $100. If not,
Yeah, even if it blows up to 1,000,
I know.
like, you're not, it's not really gonna sway your
Yeah,
taxes too
right.
much, so I wouldn't worry
In
too much
worst
about
case,
that.
you pay probably 15% on it.
Yeah,
Oh,
okay,
well, yeah.
that's what, okay, thank you.
Then you still made money, so it's fine.
There you go.
Yeah.
Yeah.
Last point.
Which one?
6, right? You cover everything else?
Yeah, do you guys have any questions off of that? I know we kinda covered a ton of stuff.
Yeah.
Good
The
stuff,
other,
though.
the other part I would plug in here is we'd be happy to help any of you guys with any of this stuff. I didn't even bring cards if you
I
guys
was
do
just
that.
gonna
but-
ask.
Yeah.
I'll send out your information.
Okay, Dan has
Yeah,
my
absolutely.
information, so we'd love to
You guys are
help you
taking
guys
new
with.
clients?
Oh, yeah.
Do you guys do tax planning?
And they'll actually return your call. So, thank you.
Yes, yes.
No kidding, I've been waiting for a while for my
Yeah.
next guy.
We're
No,
pretty
that's-
aggressive growth
That
minded,
question is a question we get,
What was the
very
question?
often. Are you taking new clients?
Cause a lot of old time, or people get established and they don't wanna take new clients.
Yeah, it's actually it's a big problem right now, in fact.
Yeah, I
'cause,
know.
75% of the CPAs in Michigan are retirement age,
Yep.
and I think only about 25% of them are set to be replaced.
And almost all my new clients that just randomly call to see are saying somebody's retiring, or or something like that, so.
How do you
Or
know?
someone died. Those are the two.
Our tax person, I'm pretty sure she gives us like a family friend.
Yeah.
How do you go off like charging for doing the taxes? Do you take a percent? Or do you-
No,
Flat rate.
it's a flat-ish rate because it changes on what forms we have to do.
Right.
So we have a set price for, like our,
What's?
yeah, for each form, I'd say. So
Yeah.
our basic 1040, if you were single and you had a W-2,
Yep.
it's gonna be $230. A Schedule C is an additional, I wanna say it's a little more than that, even 125 for 2024. So it's hard to give you an exact number without knowing what you have.
So 350.
Yeah.
And they're,
And
I
other
just need to
things.
tell her thing.
Other things
Yes.
change it, so, like, you have multiple Schedule Cs, that changes it, if you have a Schedule, if you have a Schedule C
The
that
more
has
work,
like
the more.
1 1099 pointing to it, like, we sometimes adjust the rate, 'cause it's like, no, it's,
Right.
we're just putting
But-
a number in there.
But you can write it off.
Yeah, I mean, yeah.
You can write off.
Yeah.
So like.
So there's so many factors that go into
Yeah,
the
it's
tax
hard to give an
return.
exact, cause
Child tax
if you
credits,
have
all of
10 things on a new business and it took me 2 minutes to do, I'm probably not gonna throw the full price at you, so it's hard to give an exact number because it does change.
Every person's
We
different.
always give people a range whenever we actually see their documents or have a more in-depth conversation with them. And the range is just because we don't know where it's gonna land in there.
Well, the fact that you're also giving us tax tips is, I think, huge for your business, because a lot of CPAs and accountants do not do that. They just say, here, give me the paperwork, I don't wanna see all your receipts, blah, blah, blah.
So
How do you know how to plan or look forward in your business?
Well, I mean, the thing that makes us different is that we're financial planners. That's the biggest thing that we are. Taxes are a part of what we do. We do all.
Cause you guys do trusts, you do,
Yeah.
We
There's
do,
a lot
we
of
do book-
services you guys
we do
provide.
bookkeeping, we have a good partnership with some insurance company that we do a lot of good work with.
You're
So
not
we-
just working one time a year.
No, definitely not.
They got quarterlies to
and
sit
their,
down.
their office,
Yeah, but investments, retirement planning, all of those things, like, we do all of that, because we don't believe that you can look at a tax return and help somebody fully by just looking at their tax return. You need a whole picture of everything that they have going on.
That's a good slogan.
Yeah, the biggest thing we would run into is financial advisors will say, oh, just convert your Roth, 10 grand, no big deal, and then we're doing your taxes, and it's like, well, you're in a 30% bracket. Probably wasn't a good idea to do that, and there's just never good coordination, so that's kind of why Pathway started doing what it did 20 plus years ago of coordinating the two.
So, do you work with other, investors, like even with Edward Jones?
We certainly will,
Okay.
right? Like, I have people that I just do taxes for, I have people I just do investments for, and then I have people I do both for. So we're not saying that's what we do and that's all we'll do.
Sure.
Yeah.
But we will say that most investment advisors, they actually can't give tax advice
Legally.
legally.
Right.
And we are certified at Pathway as both investment advisors and also as tax professionals. So we can do both sides of that without getting into
And their office is right next to Gravity, so
Oh,
very,
very
very
cool.
close.
Everybody knows where gravity is.
Yes.
I do have another question, so say for example, for me, I still have a W-2 from most of the year, and then just the past few months, kind of like 1099. So it would be the charge for the W-2 and then the 1099, right? Or it would depend?
Yeah, ask your question again, I lost the end.
No, I got it.
Okay.
So it's, the W-2 is just the 1040. There
Okay,
isn't really much going on there unless there are some contributions to a retirement account or something like that. But overall, it's gonna be pretty minimal.
okay,
So it'll just be the 230 base plus the cost of the Schedule C.
okay.
Again, that's assuming those are the only two things that you have going on.
Yeah.
There are other things that we pick up for people, rent deductions and stuff like that, that you don't get tax forms for every year, but we just know exist and want to pick up for people if we can.
Okay.
You only get a 1099 if you've made money in real estate, right though? Like if I didn't make money my first year of real estate, I wouldn't receive a 1099.
Yeah, if you didn't make anything, you're not gonna get 1099.
Right. I sounded like super.
So how does that, so I didn't make anything this year off my 1099, but I still had,
Expenses?
expenses there, so am I just putting 0 and then adding expenses?
That was what my question was earlier.
I'm trying to
Yes.
remember, yeah, if you're planning on still doing 1099 down the road, if you never are planning on doing 1099 stuff, then yeah, stop deducting it, right, you're strictly W-2. But in your case where you did have both last year, yeah,
I
Okay,
believe the IRS kind of puts it as like intent for profit.
yeah,
So if there is an intent for profit and it's not there, or let's say you make nothing this year, but you make 20,000 next year, but you still had more expenses than the 20,000, there's an intent for profit there.
Okay.
Like you increased your income year over year and you're trying to do more of that. That's more of what they look at for distinguishing between a hobby and a job.
okay.
good. I don't know if I have anything on here, unless if you
That's
guys,
great.
anything else you wanna hear?
Thank you for
If
your knowledge.
someone tells you to start an S corporation, don't do it.
Thank you, that's the best.
That's further down the road.
LLC is the way to go.
I think Micah's gonna bring these in just a little bit.
Oh, perfect.